All right, let's dive in today. And we're looking at, well, how things are shaking out. Early days
Yeah.
with Trump back in the White House,
Mm-hmm.
Trump 2.0, I guess some are calling it.
Right.
But specifically, how's this impacting the markets,
Uh-huh.
the tech world? Big question marks all over the place.
Absolutely.
And we've got some really sharp voices to help us kind of unpack this whole thing.
Yeah, we do.
First up, we're going right to Davos. Big power players there as always. And
Glorious.
Brian Moynihan, the CEO of Bank of America, he's giving us that view from the top.
Right.
Then we're going to bring in Tom Hayes.
Okay.
He's the chairman over at Great Hill Capital.
Mm-hmm.
Really smart guy when it comes to reading the markets, seeing those signals that maybe the rest of us miss.
Absolutely.
And then to round things out, we've got Paul Meeks. He's
Yeah, veteran tech investor.
veteran, been in the tech game forever. He's going to give us the Silicon Valley take on
How they're feeling.
all of this. So buckle up, because we're going to cover a lot of ground.
It is a lot to digest.
It is. It is.
It's interesting to see this already, even in these early days, kind of, signs of a potential shift happening.
Okay.
Like you said, it's early days, but, the first few weeks of this second term are already starting to create ripples.
Okay.
And those ripples, they might just turn into some tidal waves as we go through the year.
Okay. Well, let's start with Moynihan.
Sure.
He's at Davos. Like I said, that's always a powerful room.
Power room, exactly.
So just what was his overall message? What was the tone?
I thought it was pretty nuanced, actually. He wasn't just all doom and gloom or all sunshine and roses.
Right.
He did say, look, a business-friendly environment, that can be good.
Mm-hmm.
Less regulation, some stability on taxes, that kind of thing.
Right.
But then, like a really clear warning
About
with the national debt
Yeah,
that's ballooning right now. It's enormous.
Yeah, it's that dark cloud hanging over everything, right?
It is.
It is. So he's not like blindly optimistic about Trump. Round two.
No, not at all.
Okay.
And he really, really pushed the idea that we need spending discipline.
Okay.
He even used the word, I wrote it down, rational. That's what we need to be about this debt.
Okay. Interesting.
And I think what's key here is that he's not just saying, slash and burn, cut everything.
Right.
He's talking about like smart policies that help us grow the economy, because that's how you balance the budget.
Sustainably, yeah.
You got to have growth.
Mm-hmm. So he's trying to thread that needle
He is.
between, okay, some of Trump's policies, maybe they're good for business, but then this massive debt looming.
Right.
It's quite a tightrope walk.
It is. And it's, we've got to remember, this is Brian Moynihan,
Right.
CEO of Bank of America. When he speaks,
People listen.
people listen. Wall Street listens. Washington listens. He's a heavyweight.
For sure. For sure.
Yeah.
Okay, so that's kind of the big picture, right?
Mm-hmm.
But let's get down to brass tacks. Like, how was all of this
Yeah. What does it mean day to day?
exactly playing out in the markets?
Right.
And that's where Tom Hayes comes in.
Okay.
Because he can spot those patterns, right?
It's good at that,
Even when things are volatile.
especially then.
So what's he seeing in these early days?
Well, he's drawing this interesting comparison, right, between how the markets reacted to Trump's first election
Okay.
and now the second.
Mm-hmm.
And he actually thinks this knee-jerk volatility we're seeing,
Yeah.
that might be a good thing,
Okay.
because it could set us up for something similar to what happened back in 2017.
Okay.
You had that initial dip, but then international stocks, bonds, they did pretty well.
So he's saying what investors are kind of overreacting to the headlines?
Maybe.
And that creates opportunity later.
Potentially,
Okay.
yeah. He uses this term offsides to describe how the market is set up right now. And what that means is investors, they might be positioned in a way that's going to hurt them if things don't play out.
If it doesn't go
Exactly.
doom and gloom.
Right. They're betting on volatility when maybe they should be looking at the potential rebound.
Okay, interesting.
Yeah.
And Hayes, of course, he's a big value investor.
Yeah, he is.
That's been kind of out of fashion, right, for a while.
For a minute.
So does he think this is like the comeback moment?
He does. He
Like,
really
like,
does.
yeah.
He's pointing to the fact that value stocks are like insanely cheap right now compared to growth stocks.
Compared to, the hot tech stocks.
Yeah, right. And we're talking levels we haven't seen since, get this, 1980.
1980.
1980.
Wasn't that the start of like a massive bull market?
It was a turning point.
It was. And value stocks, didn't they
Took off.
take off?
Yeah,
Okay, so he's seeing like a potential echo here.
he
It's
is.
like, hey, maybe this is that
That moment.
once in a generation chance to get in while everyone else is
Chasing the shiny thing.
chasing. Yeah,
Exactly.
the shiny thing.
Yeah.
Okay, so fascinating stuff from Hayes. Very contrarian view.
Absolutely.
But before we get deeper into that, let's talk tech.
Yeah, let's just shift gears.
Silicon Valley, how are they reacting to Trump 2.0?
All right, so Paul Meeks, he had some sharp observations.
Okay.
He's seeing what he calls a conservative pivot among these leaders in Silicon Valley.
Oh.
Like they're bending over backwards to get in line with Trump's agenda.
like a reset, almost.
Almost like they want to pretend the last few years didn't happen.
Yeah, okay, so are there actual examples of this?
Yeah, you've got Meta and Microsoft.
Okay.
They're both announcing these huge cost-cutting measures,
Okay.
which, you could look at that as them trying to appeal to this whole fiscal responsibility thing
Right.
that the administration's pushing.
Yeah.
Then you've got reports of these tech execs, dropping big donations at Trump's inauguration. Like, they're saying, hey, we're on board.
It's really interesting to see them, adapting, so quickly to this new reality.
It's a whole new ballgame.
It is.
Yeah.
Okay, so what else, policy-wise, is kind of on their radar?
Well, Meeks pointed to the FCC rolling back net neutrality.
Oh, yeah.
That's a big one.
That's a big one.
Because now it gives internet providers a lot more control over how we access the internet.
Right. And that could have ripple effects for everybody, really.
For everyone, yeah. Consumers, how tech companies do business.
Yeah, we're going to have to do a whole other deep dive just on that.
Absolutely.
Okay, but for now, we've got macro concerns. Maybe value stocks are coming back. Tech is trying to figure out this new landscape.
It's a lot to digest.
Where do we even begin?
Well, I think the best place to start is with understanding the fundamentals driving this new investment world. We'll unpack all of that in part 2 of our deep dive.
Stay tuned because things are about to get really interesting.
Oh, they are. Welcome back to our deep dive into, well, I guess you could call it the Trump 2.0 era.
Yeah, trying to make sense of it all.
We've got a lot to cover, that's for sure.
We do.
But, like we were saying before the break, there might actually be some really good opportunities hidden in all this uncertainty.
Right. And that's what we're here to do, right?
So,
give people the tools, the knowledge.
Exactly.
To make those smart decisions.
We're not giving financial advice, of course.
Of course not, no.
We're bringing you these insights from the experts.
Yeah.
So you can at least, spot things that other people might be missing.
Right. Get ahead of the curve, so to speak.
Exactly.
Okay, so let's pick up where we left off.
All right.
Tom Hayes, our value investing guru, he gave us those 2 picks.
Yeah.
Advent Auto Parts.
Yeah.
And Cooper Standard.
Uh-huh.
Both turnaround stories, right?
Right. Companies that have had some rough patches, but now they're putting these strategies in place to improve.
Okay, so what are those strategies? What's he seeing there?
Well, he talks about catalyst for change. That's his term.
Okay.
And those are, specific events or actions that could really boost a company's value.
Okay, so what are the catalysts for these 2 companies?
Okay, so for Advent Auto Parts, it's the new CEO, Shane O'Kelly.
Okay.
He's got this really impressive track record in retail.
From where?
He used to run a big division at Home Depot.
Oh, wow. Okay.
Yeah. And he's known for, operational efficiency, getting the finances in order.
Sounds like he knows what he's doing.
He does. So at Advan, he's tackled their debt problem head on.
How so?
By selling off parts of the business that weren't really core to what they do.
Okay.
Brought in a bunch of cash that way.
Okay, smart.
And he's also closed down stores that weren't performing well.
Right, cut the fat.
Yeah, and focused on expanding in the areas where they are strong.
So it's like tighten the ship and then set a new course.
Exactly. Classic turnaround tactics.
Okay, but how does that translate into, actual returns for investors?
Well, Hayes is saying O'Kelly set this ambitious goal for operating income.
By when?
By 2027.
Okay.
And if Advent hits that target, the stock could triple.
Triple. Wow.
Now, that's a big if.
Yeah.
Turnarounds, they always come with risk.
Of course, yeah.
But Hayes thinks, O'Kelly's leadership, the moves they're making, it's a pretty compelling story.
Okay, so big potential upside, but gotta be cautious.
Yeah, definitely.
What about Cooper Standard? What's the turnaround there?
So Cooper Standard is more of a bet on the auto industry itself.
Okay.
They're a big parts supplier.
Right.
And Hayes thinks they're going to benefit big time when car sales pick up again.
Which, haven't car sales been kind of struggling lately?
They have, but Hayes thinks we're at a turning point.
Why?
Well, you've got pent-up demand, people who put off buying cars during the pandemic.
Right.
And then you could have this infrastructure boom.
Right, with all the government spending.
Exactly. So more people need cars. Plus, Cooper Standard has been doing their homework.
Maybe.
refinancing debt, cutting costs, getting leaner.
So they're ready for that rebound.
Exactly. They're getting their house in order just as things are about to pick up.
Smart. So what kind of returns is he talking about?
He thinks that as car sales go up, their earnings could really surge.
Okay.
And that could push the stock way higher.
How much higher?
He laid out a scenario where their earnings per share could hit $10.
Okay.
And if that happens, historically speaking, that could mean a stock price well over $100.
Okay, so again,
Big potential.
big potential.
But cyclical industries, those always come with risks.
Of course, yeah.
But Hayes thinks, in this case, the potential reward, it outweighs the risk.
Okay, so two interesting plays in the auto sector, both turnarounds.
Right.
Now let's get back to tech.
All right, back to Silicon Valley.
Paul Meeks, he gave us those picks and pans.
He did.
Which parts of tech are looking good, which ones maybe not so much.
Right, so let's start with the good news. Meeks is still bullish on certain parts of the tech world, especially anything related to AI, artificial intelligence, and cloud computing.
Right.
NVIDIA, with that new AI-powered projector they've got, he thinks that could be a game changer.
Yeah, you mentioned that before the break. What's so special about this projector?
Well, it's more than just, watching movies on your wall.
Right.
It's like a super powerful AI tool disguised as a consumer gadget.
Okay.
Meeks thinks it could actually challenge traditional CPUs.
Really?
Yeah, for things like, scientific research, data analysis, stuff like that.
So it's not just entertainment. It's like pushing the boundaries of what AI can do.
Exactly, and that's why he likes NVIDIA, because
Okay.
they specialize in these things called GPUs, graphics processing units,
Okay.
and those are already the brains behind a lot of AI applications.
Right.
So this projector, it opens up even more possibilities for them.
Okay, so new markets, more revenue streams.
Exactly.
Okay, so NVIDIA's still on his buy list.
It is.
What else is he liking?
He still sees a lot of value in Amazon,
Yeah.
specifically AWS, their cloud computing platform.
That's one that's just printing money, right?
Printing money, and he thinks it's got a lot of room to grow still.
Yeah, the cloud, it's not going anywhere, is it?
It's the future.
It is.
Yeah.
Okay, what about Broadcom?
All right, so Broadcom, they're a semiconductor company,
Okay.
and they're in a good spot to benefit from all the demand for chips that are used in data centers and networking equipment.
Right.
And as AI and cloud computing keep expanding, companies like Broadcom, they're essential.
Yeah, they're the picks and shovels of the digital gold rush.
That's a good way to put it.
So they're riding the wave.
They are.
But Meeks also gave us some pans, some companies he's betting against.
He did.
Tesla's one of them.
Yeah, he's not convinced that they can stay on top of the EV market.
The electric vehicle market.
Right, especially with all the competition heating up.
Right, so the Tesla bubble maybe is about to burst.
That's what he's saying.
Okay, bold prediction.
It is.
What else?
He's also not buying into all the hype around quantum computing.
Oh, okay.
He thinks that technology is still years away from being useful in the real world,
Right.
and that a lot of these quantum computing companies, their stock prices are just way too high.
So a little dose of skepticism never hurts.
Never hurts, especially when it comes to new technologies.
Yeah, it's easy to get caught up in the excitement.
It is. But you gotta remember, not everything that sounds cool actually turns into a profitable business.
Right. Got to separate the hype from the reality.
Exactly. Make smart decisions based on facts, not emotions.
Okay, speaking of hype versus reality, let's go back to Scaramucci for a minute.
Okay.
He really tore into that Trump-branded meme coin.
He did, didn't he?
Called it a clearing station for bribery. Said it was a stain on the presidency.
Strong words.
Strong words, but important to remember, he still believes in the underlying technology.
He does.
Blockchain.
Blockchain, he thinks that's a game changer.
Especially for things like...
cross-border payments, supply chains, all kinds of stuff.
So he's making that distinction between, like, the meme coin craziness
Right.
and the real potential of blockchain.
Yeah, he's looking for the long-term value, not the quick buck.
And he's putting his money where his mouth is.
He is investing in companies that are actually building the infrastructure for this new digital economy.
Okay, so blockchain on one end of the spectrum,
Right.
and then his other favorite, real estate, on the other.
He likes the stability, the tax advantages, especially if you're willing to be hands-on.
Yeah. So it's all about, having a diversified portfolio,
Yeah.
understanding what you're investing in.
Understanding the risks and the rewards.
Right. And making choices that fit your goals.
Exactly. And that's really what we're trying to do here with this deep dive.
Give people the big picture.
Give them the information they need to make smart choices.
Okay, so we've covered a lot of ground here. Macro insights from one hand, stock picks from Hayes, tech trends from Meeks,
Yeah, and even a takedown of meme coins.
trying to make sense of this Trump 2.0 world.
We've looked at the opportunities, the potential pitfalls, but we're not done yet.
That's right. In part 3 of our deep dive, we're going to zoom out even further.
Yeah.
We're going to look at the policy landscape, how Trump's agenda might impact tech, the markets, our lives.
Stay tuned because the journey continues.
Welcome back. Final stretch of our deep dive here.
It is. We've gone deep, haven't we?
We have. We've talked stocks. We've talked market trends.
Big picture stuff.
But now I think it's time to zoom out even more, right?
Yeah, the really big picture.
Yeah, and look at, like, the ripple effects of these Trump policies, right?
Right.
I mean, we've touched on tariffs, immigration, the Fed trying to walk that tightrope.
Crypto, too. Don't forget crypto.
Oh, yeah, crypto regulation. It's all swirling around.
It's a lot.
It's like a tornado of uncertainty out there.
It is a bit of a whirlwind.
So where do we even begin to untangle all of this?
I think we got to start with trade.
Okay.
Trump loves tariffs. That's no secret.
No, not at all.
And he's already talking about slapping some big ones on China.
Right.
Which could have huge consequences, not just for them, but for, like, the whole global economy.
Yeah. Hey, so let's break that down.
Go.
Tariffs, for people who don't follow this stuff closely.
Sure.
What are they? Why are they such a big deal?
Okay, so basically a tariff is like a tax on stuff that's imported.
Okay.
So if, say, the U.S. puts a tariff on Chinese electronics, those electronics become more expensive for Americans to buy.
Okay, so it's to protect American companies, right?
Exactly. Make those foreign goods less competitive.
Okay, I get that. But then what happens when China retaliates?
Right, and that's the problem.
Yeah.
You get these trade wars, and those are almost never good for anyone.
Right, they disrupt everything, right?
They do. Supply chains get messed up, economies slow down, consumers end up paying more.
It's lose-lose.
Yeah, pretty much.
And with China and the U.S., I mean, they're so interconnected.
They are.
It could be really messy.
Really messy.
So tariffs, it's like playing with fire, almost.
It is. There's that short-term gain maybe, but the long-term consequences,
Yeah.
they could be really bad.
In all this uncertainty, it's got to be freaking businesses out, right?
Oh, yeah, especially tech companies.
Because they rely on those global supply chains.
Right, and access to international markets.
If those tariffs start flying,
It's going to cost them more, profits could shrink, jobs could be lost.
yeah, it's a domino effect.
It is.
And then you layer on top of that the immigration issue,
Right, another big one, especially for tech.
because they need those skilled workers.
They do. The best and brightest, a lot of them come from overseas.
Right, H-1B, visas, all that.
Exactly, and if Trump cracks down on those,
Like he's talked about.
like he's talked about, it could create a real talent shortage in Silicon Valley.
And then American companies, they can't compete as well.
Right. Innovation slows down. It's a problem.
So it's not just about protecting American jobs. It's also about,
Attracting the best talent, the best ideas.
and if those people can't come here,
Exactly.
that hurts everyone in the long run.
In the long run, yeah.
So it's tariffs, it's immigration, and then, of course, you got the Fed.
Oh, yeah, the Fed, always a wild card.
Trying to balance that growth versus inflation equation.
Walking that tightrope.
And then you got Trump, who likes to,
Put his thumb on the scale.
put his thumb on the scale. Exactly.
Yeah.
Wants those interest rates low.
Even if it's not the best thing for the economy long term.
Right. And if the Fed gives into that pressure,
It hurts their credibility. Inflation could get out of control.
it's a mess. And then you throw crypto into the mix.
Oh, yeah, crypto, the Wild West.
I mean, we saw what happened with that Trump meme coin.
Right, the administration's still trying to figure out how to regulate this whole thing.
And who knows what Trump might do.
He could use it as leverage in trade deals, try to control the markets.
It's like we're in uncharted territory here.
We are. A lot of uncertainty, a lot of forces colliding.
But, even in chaos, there's opportunity, right?
There is. Always.
If you know what to look for.
If you're prepared.
So as we wrap up this deep dive, what's the one thing you want our listeners to take away from all of this?
Think for yourself.
Yeah.
Don't just follow the headlines. Don't panic.
Do your own research.
Exactly. Understand the risks. Understand the potential rewards.
Because there's no easy answers here.
There aren't, but if you stay informed, if you stay curious...
You can not just survive, you can thrive.
Absolutely.
That's the goal.
That's the goal.
Yeah.
Well, thanks for walking us through all of this. It's been a wild ride.
It has, but hey, that's the world we live in now.
And to our listeners, keep diving deep, because this story, it's just getting started.
It is. Stay tuned.